Today's weekly market check-in with myself, Greta Wall, and the leader of T3 Live's Momentum Express virtual trading floor, JR Romero. JR, thanks as always for doing this with me today. How's your trading day going so far?
Excellent. Enjoying that ISM services rally post 10 a.m. We had a great morning in the room, and looking forward to see what happens here at the end of the movie into Power Hour. Very exciting.
Quite a bounce happening for the market today after the data we got this morning. So let's start earlier in the morning with the data that came out, and then we'll get to what has happened since. So the labor market is, of course, very much in focus for this week as we approach Friday, which is the NFP number. We got the first piece of data yesterday, which was the JOLTS that came in at around 8.75 million job openings in February. It's pretty much in line with expectations, a little bit hotter, but okay. This morning, we got the ADP private employment report, which showed 184,000 jobs were added in March, hotter than expected, and wage growth was up 5.1% year over year, which was unchanged from February. And a lot of focus is on the wage growth, of course, in all of the labor data that we're getting because of inflation. So then the official jobs report will be out on Friday. Expectations are for a bit of a slowdown, but the unemployment rate to tick lower, wage growth expected to slow. We'll see. So for you as a trader, what's been your focus in these pieces of labor market data that we've gotten so far? And what are you hoping to see from the jobs report on Friday that could be good for or bad for yourself as a trader in the market?
Yeah. First of all, thank you for putting these little snips of data up so I don't have to look them up. I'm terrible with numbers. I always forget, and then I have to frantically look them up. So that's great. So I think that the thing that most people miss is, I think the importance here. Obviously, the Fed wants 2% inflation target, but what really will propel the market, among other things, is seeing wage growth outpace inflation. That is the key. I think one of the key determinants. As far as Friday, we had a 275,000 print on the non-farm payrolls, and we have 200,000 forecasted. So another hot print would definitely be, I think, detrimental. But I think it's all about wage growth versus inflation.
Many people are saying that this week's NFP is kind of like the most important that we've gotten in a few months, because it's really kind of a key report for the Fed after that last dot plot that we got from the last Fed meeting. Would you agree that this week's report holds more weight for the Fed than the previous few months?
No, I think earnings are going to be essential.
Okay. Yeah. So speaking of the Fed, the sentiment seems to be getting maybe a little bit more hawkish since that last meeting. We've had several Fed speakers speaking so far this week. It's just a rush of like 3-4 a day. Bostic was the latest this morning on CNBC. People can read the quote from him, but basically the gist of what he said was he only sees one cut and he sees it in Q4. Mester was speaking yesterday. She says they're still heading toward that downward trajectory of 2%, but she needs more data to raise her confidence. So she's not saying 3 is promised, and Daily as well, saying 3 cuts is a projection. A projection, though, is not a promise. We're getting there, but it's not going to be tomorrow. So do you feel like the market is sensing some more hawkishness from the Fed in recent days, or not at all? I mean, CME groups, I think I have it up here. Yeah. FedWatch tool still shows about a 57% chance of that first rate cut happening in June, but that is down from over 70% last week.
Yeah, there's a movie called Being There. It's a 1979 film. I don't know if you've seen it, with Peter Sellers. It's a fantastic movie, and you have this Chauncey Gardner character played by Peter Sellers. It's with Shirley MacLaine, I think. Really amazing film. I can't remember who directed it. Somebody from the chat can chime in. Anyways, so it's about this savant, and there's a debate whether he's an idiot savant or a savant. And you look at what the market's done since December, and what the summary of economic projections we're printing, and you wonder, is Jerome Powell Peter Sellers or is he Niccolo Machiavelli? Hard to say. But I think that my main takeaway is the fact that if you look at the 10-year bond, right, as an asset, right, and you go back to December and you superimpose that with the S&Ps, right, we've had a market. Should I share my chart?
Yeah, sure. I'll pull it up.
How do I do that? There we go. Thank you. So this is the 10-year bond, right? This is the December meeting. Okay. Let's see. How do I superimpose SPX? So this is superimposing it on the wrong chart. Yeah. Oh no, there it is. Yeah, they're just so. I don't know if you can see this. So this here, the orange line is the SPX, and this is the bonds, right? So we've had a market that's completely detached from the bonds. The bonds have not made a new high since the December meeting, and the 10-year is ascending here in a very clear, strong bull channel. Right, so to expect multiple rate cuts this year, given what the Fed futures are telling us, seems like a juvenile fantasy at this point. There are people, credible people. I mean, I don't know if you want to call Larry Kudlow credible, but he's calling for no rate cuts this year. And we have Bostic this morning talking about one. So when I hear that kind of discord, I really look toward earnings. I think earnings are going to give us direction in the market. If the mega caps can't hold up the S&Ps, if you see Microsoft and Nvidia come in, we're going much lower.
Speaking of earnings, with those earnings set to begin in just a couple weeks, the last earnings season, of course, we've seen a huge run up in the market. Do you think many stocks are positioned in a place where they have to really beat to be able to move higher versus just meet expectations? Do we need like really strong beats across the board to move higher from where we currently are?
I don't know how the market will react, and most people really never know. I think we're going to have to set a bar initially, and based on that bar, excuse me, I don't know why my camera moved. We'll have to see what happens. Okay.
So since this morning, since we got that hotter than expected labor market data, we've gotten some softer than expected services data. This comes after ISM's manufacturing index was hotter than expected on Monday, and that kind of spurred the meltdown that we saw over the past 2 days. Not the meltdown, but the drop we saw over the past 2 days. And then the services sector came in weaker than expected this morning, prompting a bit of a rally here midday. How did you navigate this morning ahead of 10 a.m. and then how have you navigated after 10 a.m. following that services data that came out today?
Sure. So I was watching the S&Ps, okay, and we saw a clear wall of sellers at 52.56. And what I told the room was, so what I like to do structurally, my drawing tool doesn't work here. So what I like to do structurally is take the relevant chunks of the price action, and I'll just zoom out here so you can see. So in terms of the overall market, right, we had a strong two-wave corrective move to the bottom of this channel, just really, technical analysis 101, right? And then a shallow bounce that failed initially to produce an ABCD higher here. You see that? Initially. So right here, I know this is very nerdy, in the weeds type of technical
Oh, this
analysis.
is what we want. Yeah, this is great.
Yeah. So right here, right, this is called a piercing reversal. This red bar right there. So what I told the room was, until this level here, around 52.56 to 52.60 is broken, right? You're going to be dealing with this prior effort. So I see price action within, especially at the bottom of a channel, as sequences, right? So I said until the bulls can give us a break of 52.57, 52.60, all right, we're going to be stuck in this range. So in a tighter time frame, you can see here we had, what I call a shakeout of the channel line. So I'm just going to zoom out again for the television audience so they can see. So this is a 1 hour chart of the S&Ps, right? We've been riding an inner channel line and an outer channel line higher. And every time we hit this channel line, we tend to pop, right? Mm-hmm. So I didn't want to buy the market ahead of the ISM data because I wasn't sure what it was going to do this morning. But we were in some really strong place. So I'll go over those in a second. But the clear buy signal came in the session when we had the ISM data and we cleared this 52.57 pivot. That was my all-in long signal, and I bought a lot of stuff at that point. And we rode the S&Ps all the way to 52.78, which was a nice chunk of change there. So that was the trade of the day for me, and we had some really nice, outstanding plays. We bought AMD right off the open. I love that when you have a curling 2-minute 200 here. I like to buy the shakeout. So we bought AMD off the open, anticipating the break of 179.25. Sold the pop, bought the pullback, sold the pop again. So that was a really nice early morning play. One of our illustrious traders in the room, a trader I respect a lot, called out APP AppLovin. AppLovin has been in a beautiful uptrend here since a base breakout. You had a bit of an ascending triangle and a breakaway gap. So AppLovin, a lot of us were watching this one. I wasn't watching it this morning, but I really lean on my traders. We have a lot of full-time professional traders in the room, and you're gonna not to quote Pokemon, but you can't always catch them all. But thankfully, I have really good teammates, and they called out the flat top break there at 69.74, and we rode it all the way to the top. We sold the very top here in the 73.60s. I called out I called it out as a sell right at the top there. So we caught pretty much this entire move this morning in APP. Another couple of ones we called out in the room earlier was Amazon, which had a phenomenal move this morning, and Dell, which has been an absolute tear. We called the 5-minute breakout here of the flag. It was a bit messy, but you can see the kind of move Dell had today. So, we were able to gauge market momentum after 10 a.m., primarily looking at the dollar index, which really rolled over after 10 a.m. today. You can see this is the 10 o'clock bar and the 10-year yields. That was our confirmation that it was time to go long today. And we just hit the gas pedal, which is nice because we really haven't hit the gas pedal in about a week and a half, 2 weeks. It's been an incredibly monotonous and pusillanimous type of market. It's been range bound, a lot of false breakdowns, false breakouts. It's just Canaleo, just a pain in the neck to trade. So it's nice to finally have some momentum.
Yeah. When it comes to days like today, when you're kind of waiting for data at 10 a.m., 30 minutes after the open, do you just kind of sit on your hands in that 30-minute time period while you're waiting, or I'm sure you're constantly looking for things to do, but were you most active after that 10 a.m. spot, or still really active at the open today?
Yeah, so that's a great question. So we had data at 9:45, and at 10. So those were the two those were the two kind of seminal moments we were watching for. However, there were some moves that were easy to spot. APP this morning, you had a clear continuation break. You have a beautiful bottoming base here, right? And some names are just going to move no matter what. So there's your bottoming base and your breakout, confirming the initial context structure and roadmap of this play, which is really bullish, right? If you look at the daily chart, you see a very, very strong sequence here off this ascending triangle break. So that one was kind of a no-brainer. AMD initially was very much a no-brainer off the open as well. Shakeout off the 2-minute 200. This is one of those get the bills paid kind of trade. However, you trade these with a lot more caution because there's a lot of data coming, and you don't yet have the confirmation that you have a sign of strength through. In our case, was 52.57. We needed to see an explosion with volume through that level to confirm that buyers were going to step in and take this entire structure here. I see this as one big reaccumulative structure. I needed to see the market push past that level as my confirmation that this shakeout here in the S&Ps was indeed a shakeout right there, right, and not a two-wave corrective lower, right? Sometimes you get an initial bounce, but if buyers can't take it through the key level, right, you often do something like this, right? You'll do something like this, fail, and then sellers take over as buyers capitulate, and everyone tends, humans, because we're all pattern-based and educated with the same textbooks and so on and so forth. Everyone has the brilliant idea of setting their stop in the same place, and guess what happens when you hit that level, right?
Yeah.
Shorts pile on, stops trigger, and it's party time. So until I had that confirmation, it was hard to put on a lot of size, but we had some really nice cash flow trades, and did well regardless.
That's what I was going to ask. When you're being more cautious with these types of trades while you're waiting for data, are you operating with tighter stop losses? Are you tiering in at smaller sizes until you get that confirmation, and then you're adding more size later on?
Yeah, the bigger my statistical edge, the higher my tier. I know for some traders that's a no-no, but what I don't work on just risk reward. I work on risk reward and probability. Engaging probability is a bit of a dark art. It's half science, half, I guess, experience and intuition. I know a lot of people don't like the I word mentioned, intuition, instinct, but it's a big part of being a trader. If you've been doing this for a long time, it's like watching a movie over and over. We all have that one friend who can recite every single line in Star Wars, Return of the Jedi or whatever. I feel like traders are when you're more experienced trader, you kind of have that with the market. You've seen this movie before, what you're looking for, and you know what you want to see in order to, if you have, if you're very two-dimensional and you're just working with risk and reward, you're going to be very, very two-dimensional in terms of your tier sizing. Probability is the big one. Right. It's risk, reward, and probability. There's three things that you really need to think about. So I like to tier according to, probability. So if I see high probability setups, I tend to tier with more size. And when the market's slow and there's not a lot of momentum and we're range bound, I tend to change my strategy and definitely change my tier size.
So with the jobs report coming up on Friday, Obviously, none of us can predict what's going to happen to the market. None of us can predict what the number is going to be. The estimate, again, is 200,000, which will be weaker than February. How are you approaching the rest of today's session and tomorrow's session to position yourself ahead of Friday morning? And will you be really active in the pre-market on Friday, super active at the open? What are you planning for yourself when it comes to trading into and after the jobs report on Friday?
I'll probably wait for the data to come out. So Friday, we have, if I'm not mistaken, it's at 8:30, right?
8:30.
Yeah.
Mhm.
Yeah. So I'll probably trade the employment report numbers, scalp the S&Ps. If it's really good, I'll probably buy a bunch of stuff in the pre-market, and then we're gonna wait. We also have Barkin and Bowman speaking on Friday, so we're gonna have to watch out for that. Those a lot of these speeches are like hidden landmines. You never know what they're gonna say.
Yeah.
So
And speaking of Fed speakers, Fed Chair Powell is speaking now, and I'm just kind of looking at like highlights, saying like it's too soon to say whether the recent readings represent more than just a bump when that comes to inflation. Talking about the last CPI reading was a little hot, the last PCE reading was in line last week, and so next, we have the CPI in I think 2 weeks from this week. So of course they're just waiting for more data. That kind of seems to be the message from all of the Fed speakers that we've gotten so far this week, is we just need more data to be confident in our plan. But as we all know, they still have the dot plot showing. Okay, let's talk about Tesla real quick. This is a stock that you have been very active in the room. You and your traders in Momentum Express have done a lot of trading in Tesla. Tesla reported Q1 deliveries yesterday, and they were a huge disappointment. I mean, way, way, way below what anyone expected. Tesla blaming that on a decline in blaming that on the early phase of the production ramp of the updated Model 3 at the Fremont,
I
California
mean they
factory.
blame the Houthi rebels. I mean the German gigafactory.
Yeah. So give me a reaction to those numbers. And did you trade the stock? The stock is up today after dropping about 5% yesterday. So it's turned higher today. Were you trading Tesla into those numbers, trading after? What's been your strategy on Tesla so far this week?
I did trade the release to great effect, and that was really good on the short side for a nice hefty scalp. This morning it got taken to the woodshed. JP Morgan, HSBC, Deutsche Bank, Baird, Truist all came out loaded for bear. So it was when I see so much negativity, I tend to be pretty shy about taking the big short. The trade's probably over. I mean, Tesla probably has a day with destiny, a retest of 160, maybe 158.50 in short order. Tesla is a very unforgiving stock to the shorts historically. People who have bet against Tesla, I mean, usually overall have failed fantastically. Look at was it Michael Burry? That was his famous Tesla short. He got absolutely massacred. Overall, people who bet against the market historically tend to have a very difficult time. The market rewards bulls in the long run. In terms of the overall market, I feel like that's probably true for Tesla. I think the market is underestimating the impact they're going to have in robotics, AI, and energy storage. There's been a very strong sentiment shift around EVs in general, which I think is is probably not going to be long lived, and I think Tesla will very likely see all-time highs in the next year or two.
All right. So let's go ahead and review some trades that you've done over the past week. You talked about the ones that you were in this morning, but heading into today's session, as you mentioned, we were very range bound and things were maybe a bit more difficult. So
Yeah.
kind of highlight some of the trades that you were doing during that part of the market, during that action, and how you were able to find those ideas, what you saw on the chart, how you navigated the trade, etc.
Yeah, sure. Yesterday we did the opening range breakdown on AMD. So when AMD cracked 179.91, that's this line right here. Yesterday, we took her short right into this double bottom. So right there around 175.49 off the break of 179.90. So, is this like a trade I'm going to hang up on my wall and say, wow, those were the good days? No, but 3-4 point scalp off the opening range breakdown in the morning pays the bills. We took that on the S&Ps yesterday. We took the so right here. So we saw on the S&Ps a very clearly delineated inverse head and shoulders, and then a falling wedge. So we bought the falling wedge snapback here basically for the trend change intraday, and a lot of our traders basically rode this channel into the end of the day right here. So we called the bottom of the market perfectly, and took it long for a ride. In a range bound market, these are the types of trades we try to find. 10, 20 point scalps in the S&Ps, buying bottoms correctly, and just waiting for the weather to improve.
As you and I talk about your trades each week, it's very obvious that you don't just stick to one side of a specific trade on a specific name. You'll short a name one moment and you'll go long it the next, sometimes in the same session, sometimes day after day. What is it about your mentality that allows you to, look at each setup as an individual setup and completely forget about what you did on that stock, maybe the day before, maybe an hour before, instead of getting stuck in, I always short this stock, I don't go long it, things like that?
Well, this is a very personal thing. I know a lot of traders who are just long biased and don't like shorting, especially on the swing side of things. And I know a lot of traders who just like to short names, which I find wild that people are so directionally biased. I really don't care. I just want them to move. Right. Honestly, as long as they move one direction or the other, as a day trader, I could care less what's happening to the name. I do personally like bullish rallies better. I don't know. Call me sentimental or whatever, but they're more fun. But really, I could care less as far as making money is concerned. I always tell my traders, think like a merchant. Think value. Are we breaking a value area in either direction? If so, are we getting ready for a momentum move? AMD case in point, right? Clear break of a key break of a value area here. You're right, and this is where you have an imbalance between buyers and sellers. You get momentum, right? Again, same thing this morning, right? You came in, retested value, rejected it. So if I profile this area right here, you'll see this is the top of value, right? 177.25. We came into yesterday's top of value, rejected it, clear the test of the 200, rejection. Okay, time to go long, right? We expect momentum to take us higher. I only care about the price cycle, right? This is a very Wyckofian attitude to the market, right? You have a price cycle. We affectionately call this Wendy, right? As in Wendy from Wendy's, just to pass the time. But basically, you have a price cycle. It's the adoption diffusion cycle, right? You have early adopters, markups, distribution, tops, and markdowns. And when you are in what looks to me yesterday potential accumulative bottom here in AMD, and off the open you get that rejection of the top of value, right? That tells me, okay, buyers most likely coming in. Strong rejection off that 2-minute 200. It's time to buy something. In this case, AMD, and that's what creates momentum. That's what creates momentum in the markets.
We got a question from YouTube. Someone wants your thoughts on SYY and XBI.
Yeah, SYY. So this SYY, we're actually in a swing on. I'm expecting SYY to eventually break out here. And I'm looking for at least a move to $90. It's I don't like the fact that it's not holding the 21, but it's holding the 50, and it's still in a reaccumulative consolidation here after a very strong V platform and breakout. So the bullish sequence is still intact. XBI, a bit of a different story. So the XBI, you had a strong shakeout here through the bottom of value, a sign of strength. And this to me looks climactic. So they were not able to hold the pullback to the top of value here. It looks to me like you're most likely going to be retesting this prior point of control at 82.40. So two very different pictures there.
All right. Okay, so as we wrap things up here, we head into the end of this trading week with a big number on Friday. Talk about the key levels that you're monitoring for the market in either direction to tell you where we might trend moving forward.
Yeah, great question. So as you can see here, let me just hide my drawings so we make this easier to see. So this is the S&P futures. And we've been on an absolute tear since November. We were very active here in late October, November, looking to buy the market. And we've had an incredible run. You can see how well the market's been bouncing off the 21 EMA. My target continues to be 54 and 5,700. I don't see a trend change just yet. We are going higher on lower volume, and you can see you can start to see here some oscillation between volume, some divergence between oscillators, volume, and price, which typically either points to the end of a trend or potentially the upcoming consolidation of a trend into a new, like a reaccumulative structure. So it's hard to say what it's going to want to do. I'm still very bullish on the market. I think a lot of these mega cap techs are going to do really well in earnings season, and I do expect more upside. We'll see. Hard to say, but what this chart is telling me is we're most likely going higher. I always tell my traders, respect the trend. Respect the channels, respect the trend. If you're a trend trader, at least in your bias, you're right every time except the last time. If you're a counter trend trader, you're wrong every time except the last time. And we get paid to be right. So the trend still looks very strong to me.
All right. And then before we go, we got a question in from YouTube here asking if you think Marvell gets back to $80.
Does MRVL get back to $80? Oof. Okay. My answer is tuna fish. I'm not sure. Give me 1 sec. It's like pop quiz. I don't trade this one very often. So here, the positive is you had a nice accumulative base here. So I don't know why I'm getting using all the fancy tools, but okay, just bear with me. So this is a nice accumulative base here, and then a two-wave corrective pullback that held the prior top of the base. So buyers started to defend these pivots here at there you go. These pivots here at 47, and you had a new advance here with an inverse head and shoulders. So you price action wise, you can see very clearly delineated higher pivot lows, and then you had a neckline break. The actual measured move is 88.30 off this inverse head and shoulders. The problem in terms of general price action is that you had this bit of a climactic top. The nice thing is they defended the neckline. This is the type of base that's going to take a while to consolidate here before it retests $85. But yeah, it looks good for $88, $89. This may take a while though. This may take months to consolidate before it makes a next leg higher and takes out the prior pivot high.
Right.
So those are my thoughts.
The real-time chart analysis there from JR. Love it. All right, JR, I'm going to let you get back to trading. So have a great rest of your session and a great rest of your week. For everyone who is with us live, you can go to t3live.com/JRlive to get JR's free ebook and learn more about him and his story and who he is as a trader. Again, that's t3live.com/JRlive. And thank you again for doing this with me today, JR. Have a great rest of your day.
Thank you, Greta. Have a great one.